No change. The Federal Reserve holding interest rates steady in the range of 5.25% to 5.5%, but leaving the door open to the possibility of future rate hikes. Fed officials upgrading their assessment of the economy to strong in the third quarter. That's up from a solid pace noted in the September statement. Of course, is coming in the wake of sizzling third quarter GDP and strong consumer spending. They say job gains have, quote, moderated versus slowed from earlier in the year in the September statement. So a bit of an upgrade there to the job market as well. The Fed reiterated that future rate hikes will be contingent upon the impact of previous rate hikes, lag effects, as well as economic developments. Fed officials maintained language in their statement to keep the door open for rate hikes, saying that, quote, in determining the extent of additional policy firming that may be appropriate, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. Fed officials reiterated that they are highly attentive to inflation risks and still see inflation as, quote, elevated. This decision was unanimous. We will get more from Fed Chair Powell in less than 30 minutes' time when he holds its press conference. Back to you.
So, Jennifer, now all eyes turn to that presser. What do you expect to hear from Jerome Powell?
Yeah, I think, Josh, he's going to reiterate basically what he said on October 19th ahead of coming into this meeting. He's got to walk that tightrope of remaining cautious because the Fed has already done so much work. They don't want to plunge the economy into recession, but at the same time, we're continuing to see really resilient economic data. And so Fed Chair Powell said and added the caveat that if the economy and the job market continue to outperform, then that could, using his language, mean more work to do, more rate hikes in the future. And I really think that you're going to see the Fed chair continue with that line here in the press conference. I think there's going to be a lot of questions as well on how much the bond market is doing the Fed's work for it. And I think that is going to be contingent upon how long these yields on the 10-year Treasury can be sustained. And certainly we've seen that back off a bit from the highs of 5%.